Assets generate income for you, while liabilities drain your finances. The more assets you have generating income, the wealthier you become. This is the basic principle of getting rich. So, here are 15 assets that are increasing the wealth of the rich. Starting with number 1, cash. Cash is the most liquid form of asset, and it is universally accepted as a medium of exchange. It is the foundation of any financial strategy. Plain and simple cash in a bank deposit earns you interest. This interest is a small reward for keeping your money in the bank, and it is considered one of the safest ways to store your wealth. The downside is that the interest banks pay nowadays doesn't even keep up with inflation, but cash remains essential. Inflation erodes the purchasing power of your money over time, meaning that the real value of your cash decreases. Apple, for example, has over $150 billion in cash reserves, providing liquidity. This liquidity allows them to make quick decisions, invest in new opportunities, and weather financial storms. Rich people keep cash reserves for two main reasons: to seize opportunities immediately and to get higher returns from cash deals. Having cash on hand allows them to act swiftly when a lucrative investment or business opportunity arises. Peer-to-peer lending is an option for higher returns, offering interest rates from 7% to as high as 15 to 20%. This method connects borrowers directly with lenders, cutting out traditional financial institutions. However, always be cautious and rational when investing. High returns often come with higher risks, and it is crucial to thoroughly research and understand any investment before committing your cash. Diversifying your investments can also help mitigate risks. Number 2, real estate. Real estate is a cornerstone of wealth-building strategies for many investors. We love real estate for two reasons: rent payments and appreciation. These two factors can significantly boost your financial portfolio. Rent payments mean consistent income with minimal effort. This passive income stream can provide financial stability and freedom. You can even use short-term rentals for higher yields. Platforms like Airbnb have made it easier to maximize rental income. Appreciation happens as population increases and demand for properties rises, making real estate a solid investment. Over time, property values tend to go up, providing substantial returns. Real estate assets include residential buildings, office buildings, commercial buildings, and land. Each type of property offers unique opportunities and benefits. Remember, the house you live in is a liability, not an asset, as it costs you money without generating income. However, investing in rental properties or commercial real estate can turn liabilities into assets. Staying informed about market trends and investment opportunities is crucial. Real estate can be a dynamic and rewarding field if approached with the right knowledge and strategy. Diversifying your real estate portfolio can help manage risks and increase potential returns. Consider different property types and locations to spread your investments wisely. Number 3, bonds. When governments or businesses need cash, they issue bonds to investors. These bonds promise regular payments and have an expiry date ranging from 1 month to 30 years. Bonds are low-risk investments backed by the government, typically offering around 3% annual returns. Investors can buy bonds directly from the Treasury or through brokerage firms. Number 4, stocks. Stocks represent ownership in a publicly traded company. If a company has 10 million shares and you own 1 million, you own 10% of that company. Stocks allow individuals to own parts of successful companies with low entry barriers. Number 5, mutual and index funds. These investment vehicles are essential for anyone looking to build a diversified portfolio. Mutual funds combine multiple companies into a single investment, offering diversification and potentially safer investments. This means your money is spread across various sectors and industries, reducing the risk associated with investing in individual stocks. Index funds, like the S&P 500, include top-performing companies and replace underperforming ones. This automatic rebalancing ensures that the fund remains aligned with the market's best performers, providing a more stable and reliable investment option. The average annual return for the S&P 500 index over the past 90 years is around 9.8%. This historical performance makes it an attractive option for long-term investors looking to grow their wealth steadily over time. Index funds should be a staple in any long-term wealth-building portfolio. They offer a low-cost, efficient way to gain exposure to a broad market, making them an ideal choice for both novice and experienced investors alike. Number 6. Equipment. Any tool that helps you generate income is an asset. For a farmer, it's a tractor. For a programmer, it's a laptop. For an Uber driver, it's a car. The value of an asset depends on its direct contribution to income generation. Number 7. Patents. Patents protect your inventions, allowing you to earn money from companies using your creation. Patents can be incredibly valuable, with examples like the Slinky, Koosh Ball, and Big Mouth Billy Bass generating significant revenue. Number 8. Trademarks. Trademarks protect symbols, words, or phrases. Valuable trademarks can be licensed for commercial use, generating income. Michael Buffer's trademarked catchphrase, for example, has earned him over $400 million. Number 9. Brand and Goodwill. A brand represents a company's image, while Goodwill reflects the positive emotional attachment customers have to the brand. Both are valuable assets, with examples like the Kardashian family's brand power driving sales. Number 10. People. Employees are invaluable assets to a company. The right team can significantly impact a company's success, as seen with Apple's turnaround under Steve Jobs and Jony Ive's design contributions. Number 11. Raw materials and commodities. Investing in commodities like gold, oil, or art can be profitable if bought low and sold high. Art, for instance, has outperformed the S&P 500 over the last 20 years, making it a favored asset among the wealthy. Number 12. Books, songs, digital courses, and information. Selling information products is highly scalable, with examples like Gangnam Style generating millions in revenue. Mariah Carey's All I Want for Christmas continues to earn her significant income each year. Number 13. Royalties. Royalties from intellectual property, such as books or movies, can provide long-term income. George Lucas retained licensing and merchandising rights for Star Wars, which made him a billionaire. Number 14. Unique rights. Special licenses or geographical advantages can be valuable assets, providing competitive edges in the market. Examples include gambling rights granted to Native Americans and tax exemptions for churches. Number 15. First mover advantage and proprietary business models. Innovations like Apple's App Store or Netflix's streaming model are valuable assets that provide competitive advantages and capture market share. Lastly, consider the time-money-time arbitrage. Use your time to generate money, then use that money to buy others' time, exponentially growing your wealth. This fundamental business principle explains why companies hire employees and generate profits. And there you have it. 15 assets that the wealthy leverage to expand their fortunes. Remember, building wealth is not about luck. It's about making informed, strategic decisions and taking control of your financial future. Now, it's your turn. Go out there and start building your own wealth, one asset at a time. Because in the end, it's not just about the money. It's about the freedom and opportunities that come with it. This journey will not only change your life, but also shape the legacy you leave behind. So, take the first step today. And who knows? You might just be the next billionaire in the making. Stay ambitious, stay inspired, and as always, we'll see you at the top.